Yo guys, okay, so what am I saying? Bitcoin pushing all-time highs. Where can Solana outperform? And why in the hell do I have a sell zone on my chart if I am then extremely bullish? All that in today's video. You know the drill by now. If you want to new to the content, drop me a comment. I'd love to say hi to you. We know realistically, then when we start reaching a top, or at least a bit of a retrace, a buy the dip moment, the market will always give us strong bearish divergence. This is not to be confused as a bearish signal necessarily. It's just telling us that the market is slowing down. And there's one critical rule that I always say with any strong bearish divergence is when it's identified, meaning the price goes and makes a higher high, but the RSI at the bottom does not do that, does the opposite. It's a bullish signal until we lose that first pivot, that first point where the divergence gets marked out. If we fall below that level, okay, then we need to worry. So where we're at now, we've got yet again another strong bearish divergence on Bitcoin on the weekly time frame, but we're still above that initial pivot. So it's a bullish signal nevertheless. Okay. One thing I also want to point out to you guys on the weekly time frame of Bitcoin, I would say moon target, meaning if we can break $134,000 for price for Bitcoin, meaning we need people being very greedy very soon, that will then unlock the door for more. But as long as we stay below that area, this swing sell zone does carry some weight because we are slowing down. It's evident in the charts. The divergences are getting stronger, meaning price is not as high above the pivot anymore, which means it's not going to take a lot of retrace for us to actually fall below that line and swing the tide. So that is something we need to worry about. Okay, now that sets the tone for the bias, the larger time frame analysis. What do I have to support the fact that we could potentially see 13 bullish weeks? So if you look at this from the legacy point of view, we know that the Dixie is cross-correlated with Bitcoin. When Bitcoin creates all-time highs, the Dixie bottoms out. When the Bitcoin creates all-time bottoms, the Dixie tops out. Okay, so as far as this goes, the Dixie has been trending since Bitcoin's inception from 2009 upwards. Now, a super cycle idea does carry some weight because what will happen then in Bitcoin's performance if we find a situation where the Dixie starts moving down and retraces, because we have now lost a critical lateral range for the Dixie, which means this thing is turning bearish, which then supports the crazy that I'm sharing with you guys, that there is the potential for Bitcoin then to go through 134 and even more. At the halving cycles of Bitcoin, halving 1, 2, 3, those are the vertical red lines, and the projected next halving, which should be in around March 2028, and then using that and putting a time scale on them and finding that there's a coincidence, 32.8% of the time between it, Bitcoin tops out each time, and at 61.8 or the 618% of the time between the halvings, Bitcoin bottoms down to give us a bear market, which means that we still have time at least until November, September this year for the bull top to be in, and then only we need to be out of the markets for at least up until August 2026 next year. And that's when the most of the punishment will then occur. Okay, so larger time frame bias, I think, is set. You guys know where I'm at. Now we just need to zoom in and look at this setup in greater detail, because I need to find myself a nice entry to get in with the move, because the last setup was a short. And I also just need to understand that from that bigger point of view, I mean, this is the 4-hour trade for a living, time frame. That bigger weekly point of view, there's certain areas where price cannot fall below, where I'm not supposed to be bullish. Okay, let's just bring that line over from the weekly time frame, and that's this line over here. Very simple. $100,000. That's it. Anything between where we are now and 104 is now still to be seen bullish hunting grounds on the basis that the divergence, although bearish divergence, is still in our favor. Let's talk about this Bitcoin entry looking for. Maybe before I do that, let's go to the comments and say hi to you guys. So let's see what we've got here. Hello, Dean. Nice to see you here. Dennis, Renee, as always, Liesel. Thanks for joining in live with me. Ivan, how are you doing, my friend? I see Jason is here. Chris, Bear Moon, guys. I like that one, a bear moon. Yes, this is a bear moon analysis. I'm really looking for the moon, but I'm worried that I might need to be bearish. Okay, so what happened over the weekend? Okay, so we didn't create any real bearish divergence. We sit in an imbalance zone. So let's mark that out, where price then solved quickly. That's typically what happens. And this is the reload zone for more. This is where short players are going to try and push lower. Now, what did I teach you guys on the weekly time frame? If you've got 6 consecutive candles, you dream big. But what do we have? 1, 2, 3, 4. So if this 4-hour candle, which closes in 3.5 hours time, goes white, bearish, it then cements factually over, and that the market is going to push down a little bit lower. Now, because of the higher time frame, this is the area where I'm going to want to try and look for a demand zone buy. So let's mark out the demand zone. There's a demand zone sitting right there. And I would say that that's a significant demand zone, noting the fact that we had a really big leave the market that range. Now, where's the institutional candle sitting right there, where the money then got recycled? And 50% of that would typically be the area where I would target my next long. Okay, which means that I'm expecting, if price wants to go on higher, that might hold. And the area where I need to enter would be from 108 onwards, pushing then deeper into my weekly sell zone, which takes my target to 120, and noting fair well that would probably be a TP, maybe a TP1 or a TP2 for you guys. And then trying to push for that 135 push the level and then moon, which means that I'm going to keep that one. I won't necessarily TP at that level. This then by itself is a 14 risk to reward ratio. So if you take this setup, simple risk management for you guys, and you risk within that gray zone $100 of your capital, which means that at that level there will be $1,400 worth of profit. Now I know for well that we're going to be taking 60% off the table at that level, which means that you won't necessarily walk away with half, and then there will be another $600 to be made. So you'll be walking away with about $900 worth of profit if this analysis plays out. You have a lovely day. Thanks for taking time watching me live. I'll be seeing you guys shortly.